Good evening, everybody, and welcome. First, I want to thank Rabbi Werdy and the entire staff of CHYE. I know he doesn't do it alone. He follows his own advice. And I'm sure there were a lot of people who were involved in pulling this together, and we thank them very much. Sammy Cohen passes away, and he's waiting in heaven to get in. And he comes to the angel. The angel says, "Who are you?" He says, "I'm Sammy Cohen, the stockbroker." So the angel checks the book and says, "Okay." He gives him a silk robe and a golden stick, and he says, "You go into heaven." Right behind him is Rabbi Shapiro. Rabbi Shapiro comes up and says, "Who are you?" He says, "I'm Rabbi Shapiro. For 45 years, I was a faithful shepherd of my synagogue. I want to get into heaven." Consults the paper, and he says, "Okay, Rabbi, you go into heaven." He gives him a cotton robe and a wooden staff. And he says, "Wait a minute, the stockbroker in front of me, you gave a silk robe and a golden staff, and me you're giving a cotton robe? It doesn't seem right." He says, "Rabbi, up here we're all about results. When you gave your sermons, people slept. His clients really prayed." So tonight, we're hoping to get some prayers answered. And at a minimum, we'll get everybody some education and some knowledge about the process of going out and getting some investments. As Rabbi Werdy said, the beginning of this program is called Pitching Power, and we're going to discuss at a panel discussion about different topics. I'd like to welcome our panel of investors. Please give them a warm welcome. I'll be asking the panel a series of questions. One or many of them will answer those questions, and hopefully we'll have a lively discussion. In terms of questions from the audience, we do have a very full program, so we are going to try to get some questions in. But I would ask you to please wait for the appropriate time when the floor will be open for questions so that we can make sure that we get through the whole program. One other note is that this panel is very fine and lovely people, but they're not here to answer your questions on hashkafa and ethics about investing and business. We suggest for those questions you discuss them with your rabbi, your mashpia, etc. Keep your questions to the business at hand. And so, in getting funding for any business, there are many sources of funding. There's angel investors, friends, family. There's debt. There's venture funding. Tonight, our investor group here really represents, we tried to put together a cross-section of the investment community. And we have both angel investors, venture investors. We have some people here who are focused on debt financing. And we have people involved with the promotion of business and making connections to a variety of sources of funding as well. So without further ado, I'm going to introduce our panelists. We have with us Nehemiah Fogel and Shmuley Stern to my left. They are providers of debt funding, and we'll talk a little bit more about what they do on an ongoing basis. We have Shmuley Ganevish with us. Shmuley Ganevish focuses on funding of business and consumer-based applications, mostly related to technology. We have Robert Piachota, did I pronounce that correctly? Right here. Sorry. Robert's with us from the Brooklyn Small Business Development Center, and they make referrals to all kinds of different sources of funding and other information for businesses in New York City, and especially in Brooklyn. And we have Howard Tzvi Sachs from HL Sachs Capital. Howard. Howard, as well as an investor, and we'll find more about his investment strategies as we go along. We have with us Daniel Wolfson. Daniel. Daniel's an investor who prefers investing in companies that use technology as their competitive edge, though not necessarily technology companies. And we have Shalom Haft with us from the Hebrew Free Loan Society. And the Hebrew Free Loan Society provides funding programs for businesses, especially in the Haredi community, and Shalom runs that program for them. So without further ado, I think we'll get into the discussions. And we're going to open it up with a question to our panelists, which is, what do you look for when you're evaluating a proposal? So somebody comes to you with a proposal, they want funding for their business. Are you looking at primarily the people that come to talk to you? Are you looking at the idea, the marketplace, the competition, the exit strategy? And we'd love to hear from Howard to start us off, please.
Thank you. And, thank you, Rabbi Wordy, for making all this happen today. So if you're going to submit thank you. Who's ever going to be approaching any of us tonight, if you're going to submit a proposal or a business plan, you should have, for the first time, or if you're looking for an investment, it should already not just be at, this is what I put together. You should have already done your research. Who's your market segment? What's your market cap? As the rabbi was saying, if there is an exit strategy. And really, if you're looking for money, seed money especially, how much do you have to bring to the table to show that you're very serious about it? And if you already went to your close friends and family, that's a big thing. And if it's stage 1 development, what research have you done? Have you done market research in the actual segments to determine if there's a way to evaluate the company? Valuation is like the hardest thing, especially with some of the abstract.com or online e-commerce companies or technology sectors. So for valuation, really, if you're going to come to any of the investors, to show that it's a true value, and you could do all the forecasts you want, but you have to show some sort of concrete thing where you're getting the numbers from. So that's a key thing, showing that there's already money backing or potential, that you've really thought this out thoroughly, and that with your business plan that you know your market that you're getting into.
Thank you. Anybody else would like to add anything to that? Nehemia?
Yeah, a couple of things. When someone comes to me with a business proposal, we're kind of becoming partners. And I want to know something about the person, what background he comes from, what environment he comes from, as far as working history. If he wants to start selling things online, you can't tell me he worked in a bakery. You know, that's not going to work. Also, I guess he has to sell me the idea, and I have to be excited about it, as he is. I want to know what is special about his idea. Is it proprietary? Does he have a patent on it? Does he want to sell the same item but offer value-added services? What is it that differs him than the competition out there? Also, as he mentioned, a clear exit strategy is very important. And that's about it.
Thank you, Nehemia. Any one of our panelists have anything additional they would like to add to this discussion?
The one thing that I like to do is I like to turn the tables and play a game with the person and say, if you were sitting on my side of the table and you had the money, would you invest in this company and at what valuation? And then I argue with him back and forth to try to get the valuation up, and he argues to get it down. And it's an exercise for him to really believe if he had that money in his pocket, would he invest in that business at that valuation? Because it really boils down to two things when you look at a pitch. It's the person making the pitch, and it's, what's the value of it today and long term? Because you don't want to invest. This is not charity here. You're looking to invest that you both make money, and it's not about a press release or how exciting it sounds. It really is about the fundamentals of, is the value $1 million, $10 million? Is your money going to actually make a difference, or is he going to take it short term and he's going to need more money? So you really want the person to think through the success. The failure, everybody knows. The failure, it's closed down, everybody's happy, and they go home, and you say Kaddish, you remember the day you put it in. But it's a success. What happens if it actually takes off? Do you need more funding? And how is he thinking about that funding? So those are the things that I like to do with investors that come.
All right, thank you all very much.
Can I add one more?
Daniel.
I would take what Shmuel said one step further and say that I think it's important to have made an investment in the company already. So it's not just that you have an idea, but you've actually spent time and money getting something off the ground, building a product, having a product, maybe having sold some things online if you're looking to do an online business, if you're looking to build a purely technological company, you've actually built something. If you're a developer, you've developed something, you're a designer, you've designed something. And I think that gives me and other investors a lot of confidence that what you're doing now is not just an idea, but something that you actually can do.
So just a quick follow-up question. So what I'm hearing here basically is that it's going to be extremely difficult for somebody who hasn't actually gotten into what they're looking for money for to get funding for it. If it's just an idea, is it possible to get just an idea funded?
From
I work for the Hebrew Free Loan Society, and we only lend to absolute startups and very young businesses. So unlike probably many of the investors who are looking for a lot of experience, we specifically exist, our program exists because we realize that businesses that are less than 3 years old, no matter how much money they're making, are not going to be able to go to a bank. So that's why our loan program exists. So we're not necessarily looking for a track record in that specific business, but we are looking for you to have experience. Many of our borrowers come to us. We have one we made a loan to. He bought a grocery, but he had been managing someone else's grocery for 5 years, so we felt confident that he knew what he was doing. This was a brand new business. He was just opening the doors when we made him the loan, but we felt confident that he had experience. And the same with a lot of other lenders. They have some experience from outside of the business that they're bringing to this new business. And so that for us is enough. And also we pull a credit report for the borrower because that says a lot. People don't realize that their credit really follows them. And it's very important to have a good credit report because it does say a lot about your character. And a lot of these loans, for us anyway, are character loans. We want to know who is this person that's coming to us. Besides that, all of our loans require 2 co-signers that also have good credit. So credit is something that you should really take care of, try to build up. There are nonprofit organizations like GreenPath that help you build your credit. You don't have to pay people to improve your credit score. There are free services out there, and that's what I have to add.
Okay, thank you. All right, well, I think we're going to move it along. And the next topic we want to talk about is the nature of, goes to the relationship between the investor and the entrepreneur. And the question for our panelists is, what should an entrepreneur expect from an investor beyond their money? Is there value that an investor brings to the table? And what kind of value does an investment bring to an entrepreneur? For somebody out there who's afraid, potentially, to take outside money, is there value beyond the money? Robert, would you like to start?
Sure. It's a great question. And the process of starting this business, no matter what it is, the vetting process alone makes your idea stronger. You come up with a concept to sell a product or service, and it sounds really good over the kitchen table with your spouse. But when you go through the process of building the business plan, talking to those 2 or 3 people, as the rabbi mentioned earlier, to sort of get some different ideas and different perspectives, all of a sudden it crystallizes the concept even stronger. When you go, let's say you come to us, a Small Business Development Center, or the SBS, Small Business Service of the city, we will take you through, even further through the question and answer process, playing the game of, are you really sure about this? What if you wanted to borrow the money? Or I was asking you for the money. So the vetting process itself, I think, is very strong. And when you ultimately go to the investor, or in our case, with lenders, whether it be micro lenders or banks, or the SBA, they're going to once again sort of strengthen your resolve. So the process, I think, is just it's a productive one. You're going to have a better idea and a better process when it's all said and done. It's very few people in this room or outside that can crystallize an idea and go to market with it. It's just not going to happen, probably.
Sure.
So Shmuley asked a question about, is it possible to raise money just on an idea? And you answered that there's a Hebrew Free Loan Association that comes with 2 signers. Fact is that, startups can raise money on an idea, but it only starts with a very small circle of people. It's really friends and family that don't look at your credit score, that are not going to come after you if this doesn't work, that really trust and believe in you, and it really boils down to the person. That's the bottom line is, if the person is an honorable person, hardworking, intelligent, has a good idea, he can meet with friends and family and raise money on an idea. That's what we did when we started our company. We went to a very close circle of family, the Gnavish family. Then we went to a further circle and we raised a certain amount of money. And once we had momentum, then we were able to go to the VCs and the private equity. But it really starts with a close catalyst of people that trust you as a person, know you, and are willing to take a bet on you.
Okay, great. Anybody else want to weigh in on the question of what to expect from an investor?
I would argue that you shouldn't expect much besides for capital from an investor. It's sort of a contrarian approach, but it's probably the honest truth. I worked at a venture fund about 5-6 years ago, and we were part of a large hedge fund, and I looked at companies building financial services products. So if you're part of a hedge fund and you're making financial services products, they go really, really well together. And we would always sell the fact that we were part of this large hedge fund, and we were going to be able to help you, and we were going to be able to introduce you to every financial institution out there, and every trading platform that you had was going to be in every one of our customers. But in reality, it was just a marketing exercise, and we really didn't have that ability to do anything for you other than be your advocates. And we certainly were advocates, and for all the companies that I've invested in, and I'm sure I speak for others here, we are your advocates. But ultimately, the business lives and dies by you and by your hard work.
Anybody else?
Yeah, I wouldn't go Mr. Wolfson's route. All the businesses I invested in, I did get involved hands-on in the business. I was available to the person who took the funds for guidance and marketing, ways he can get paid, to learn how to evaluate customers. A lot of people need that guidance. And when I put my money in, we're partners, and I'm more hands-on, and I am available for your questions, help, and whatever else we can do, maybe some innovative and creative ideas.
So to respond to that, I agree with everything you said. I'm available 24/7 for any of my companies. If Joe Applebaum was in the room, he can speak to that, local Crown Heights entrepreneur. And I think that's imperative. But just what I was arguing is that when you try to sell yourself, the reality is that the only thing that they can expect from you is capital.
Listen, we don't disagree. I guess, you have the homemade challah and you have the commercial challah. It just depends where you come from.
Okay. I think at this point, if there are questions from the audience, we could entertain 1 or 2 questions.
He won't come up.
Yes?
What if you don't have a valuation for your company?
Question was, what if you don't have a valuation for your company?
Make one up.
The answer was make one up.
It depends on what industries, but if you want to do an initial market survey to see who your focus audience is, the statistics are, according to marketing experts, it's like 350 to 400. Like when a cereal company is marketing for a new product, should they do color pink, yellow, or green? They need about 400 legit surveys from the exact people they're going after. So if it's children or mothers between the ages of 24 and 36 who are at home, that's who they will go after. So my advice to you is there's actual free stuff I could discuss later where you could do your own survey either through the web or through a phone call, and gives you a set. And once you get 300-400 responses that fit your exact segment, you could at least have some sort of measurable number or measurable benchmark on who your target audience is, and this is something you could deliver. So as far as evaluation, at least now you know who your exact segment is, what they want to spend, and what they're looking for. So we're really, without much money, you can do evaluation. It might not be what the exact investor is looking for, but you can bring something to the table that's concrete and that you've done research on, and it shows you that you're passionate about it and you've done your homework.
Okay, one question from the men's side. Go ahead.
If you know, let's say you have a solid valuation, somehow you have a firm that did it or something, how do you figure out what type of return you want? Or on your side, if you have, let's say you decide this company's worth $200,000, what return are you expecting from your investment?
Everybody hear the question? The question is, what are the investors looking from a return perspective?
I don't know if you guys can, I know it varies from case to case.
I think that's the answer. I think the answer is that it's a pretty broad expectation. I don't know if everybody here has a specific, 2x, 3x, 4x, 12x.
I mean, I think if you have a portfolio of investments, simple venture math says that you want to get a 10x on all your investments, so that the investments that go to zero are worth zero, and the 10x's make up for it, and you end up somewhere around 5x. So when I make an investment, I look to see that potentially this company could be something that I could see a 10x on, knowing that it's likely not going to happen, but my hope is that it does.
So
10 times what I put in.
So when the investor exits the investment, they want 10 times more than they put in.
That's within 10 years?
Yeah, I'm sorry, I just explained. So it's within 10 years, and
10
on
times within 10 years.
that's the horizon. That's the general horizon for private equity or venture type investment, and that works out to roughly a 20% IRR, or 20% on your money year over year compounded.
Okay. What is it that the investor is going to expect from the entrepreneur? What is the demands that the investor is going to put on the entrepreneur on an ongoing basis? So the investor is going to give you your money that you want to get your business going, and then just sit back and wait for the profits to come in, or are going to demanding something else? And I'd like to start with Howard on that.
So the question, if I have it correct, is what does the investor expect of the business that they've invested in, and what's the wait time?
In other words, what? No, I mean, it's not so much as a return. We talked about that right now. But is there? In other words, is the investor going to be involved? Is the investor going to demand regular reports?
Sure,
What
sure.
sophistication? What kind of information? What kind of knowledge?
So the investor from the get-go is going to know at least on a monthly, minimum on a quarterly basis, if not even on a monthly basis or weekly, depending on what promises you've made. Typical thing is if you're bringing seed money in, or if the revenue is supposed to start happening, or if there's a website that's supposed to be built by a certain date, there's usually, or there can be a lag, and you need to update that investor weekly, if not daily, what's going on, because things happen. SHIT happens all the time, because as a young business person, you're thinking everything is going to go right, and it doesn't always happen. So you need to constantly keep the investor in the loop at all times, because it's his money or the people that he's bringing money from, and they're going to have demands too. It's kind of like you have a stock. The investor has a stock in a company. He's a shareholder, and he's at the shareholders meeting, and he always wants updates.
So one of the advantages, I think, as well, is that it creates accountability for the businessman. A lot of us need to be accountable, and as an entrepreneur, you're not necessarily accountable to anybody. So when you get an investor, suddenly you need to deliver, and somebody's asking the right questions for you. Shmuel, do you want to add anything to that?
Some of the things that I look at is not every investment is the same, and not every startup has the same resources to, churn out reports all the time. So you have to look at the size of the investment, how big the team is, and then you set up a certain reporting structure. So, if it's weekly, that you get an automated report on traffic or sales or downloads or whatever the deal or the business is. I like to not put too much effort, at the get-go on the reporting, give the entrepreneur the ability to sort of get into a groove with you, call him often to find out how things are. And then once things start taking off, then you set up a reporting structure that actually works for the company and works for you. Because, I've been on boards where some board members have asked for countless reports. I can guarantee you they probably looked at it once a year. And this CEO is running around for 3 days a week, creating reports, not focusing on the business. So it really is about maximizing his focus on the things that are important, getting enough information for you to be informed, and then increasing that as the business grows so that you can help more.
Okay, thank you very much. Next topic, so we do have to move it along? Really? Wow, okay, I was given the 5-minute warning. That's shorter than I thought. In that case, I'm going to skip some questions. Everybody's name is on a brochure that's available, so if anybody wants to know the names of our panelists, they're on that brochure that was handed out when you came in. Let me see. Is there, we talked about that already. Well, let me ask you this question. What could anybody sitting here today say to you that would get you to pull out your checkbook and write a check today? You want me to call on somebody?
Yeah, I'll give it a shot.
Robert.
Now, remember, I'm not an investor. It's not my money. I'm laying out on the table here. So I
That's why he
represent
went first.
a consortium of. It's easy for me to talk, but it's been touched on before. Do you have the research done? Do you have a good team in place? Do you know what your market is? It's knowledge and preparation. If I see intensity and preparation, I would, and I think you all would mark that person for success. How do you write a business plan? How do you do the research all by yourself with your computer? You don't have to do it all alone. That's why organizations like mine, like SBS, there are folks out there that can help you do that stuff free of charge. It doesn't cost you a nickel. Maybe it's not the best at times, but it's a piece of the puzzle. You can fill your business plan with great data and great market research, and I'm going to guess if a lot of people see that kind of preparation, you're going to have a winner. So.
Thank you very much. Anybody else on our panel want to respond to this?
Yes.
Jaime?
What would make me write a check? A purchase order from the United States government, an invoice from China. That would make me write a check.
Okay, fair enough. Daniel?
In true venture investing, I think that it's rare to find somebody to actually take out a checkbook and write a check. The only story that I know of is the guy that wrote Google a $100,000 check. The former president of Sun Microsystems wrote the 2 founders of Google a check for $100,000 in his backyard. He said, "I'm sorry guys, I got to run, but here's a check for $100,000." And obviously that worked out very well. But you have to be Larry and Sergey to be able to get that $100,000 check at a first meeting. So I think it's really rare to be able to get a check at a first meeting. I think that building a relationship with the investor is really what's important, and consistently calling the investor, following up with emails, making calls again if you're truly interested. I think investors like to see that somebody cares enough to go after them and shows that they're really passionate about the business idea.
Okay, great. So following up with your investors on a regular basis, how long do you think it would be a reasonable time to expect from when you first pitch an investor till you might get funding or be told that you're not going to get funding? So if somebody's out here trying to get their business off the ground, they need money today, how long do you think that process might take before they could actually get funded? 2 months, 3 months, 6 months, a year?
I can just tell you that
Without a purchase order from the United
was
States
48
government?
hours to 30 days, I guess. By that time, you're either going to do it or you're not.
Our loan process takes about 30 days. We present all of our loans to our board of directors. They meet once a month. So as long as you get the loan request in at least 2 weeks before they meet, you would be presented. So the most it is about 30 days.
So one last question for everybody. I know we didn't really get a chance for everybody to really talk about their focus in investing. And I'm not sure that we have the time to do that for everybody. We have a time if everybody does it for 1 minute? Okay. So if every one of our panelists could give a 1-minute overview of your focus of investment, what kind of businesses you invest in, and the kinds of dollars that you generally would invest in a particular venture, that'd be great. Let's just do it in order of the seating.
Our program focuses on the Haredi communities of New York City, residents of New York City. You have to be a resident of New York City. Loan amounts are up to $25,000. The loan term is usually 60 months, payable monthly without interest. But the board of directors will decide what the loan term is and how much you get approved for, or if you don't get approved. That's basically it.
The amount of loans fit anywhere as low as 45 to 50 to upwards of $200,000. It's for smaller, mid-sized cap companies. Not only do we invest, you also get my personal commitment to either coach, bring you up to where you need to be, partner you with the right people, and help you leverage yourself to the best of your abilities to help grow the business. So you'll get an investor, and you're also going to get a business coach, which is what differentiates us from other investors. And as far as the lag time, it could be anywhere, I would say 60 days and up till a check can be cut. So.
Hi, my name is Daniel Wolfson. I make investments as small as $10,000 and as large as $7 million. I look to invest in entrepreneurs that have innovative ideas and are doing things that other people aren't doing. And to the extent that they're doing something that everybody else is doing, to the extent that an entrepreneur is doing something that everybody else is doing, he's just doing a better job at it. So I think the most important thing for me is to see passionate entrepreneurs that have started something on their own and looking to help continually grow that.
My name is Shmuel Ganevish, and our investment thesis usually really focuses on the person first and then the business. We invest as low as $25,000, and depending on the business, we can go a few million, and it's not often that we do that big of an investment. We focus around technology. We've pretty much grinded our teeth in that field, and we know a lot about the technology advancements, and we try to capitalize on what we've learned in the past.
Robert?
Again, Rob Piota. We do most work with the SBA as guarantors of the loans. Anything from $1,000 up to about $2 million. It's got to be legal, it's got to be ethical, and it can't be speculative. We don't do real estate. However, if you're nonprofit or you are speculative, we'll get you to the right people.
Stern.
My name is Shmuley Stern. Some of you know me as Sam Stern. My background primarily is real estate. I've done a substantial amount of hard money loans. A lot of them took place here in the community to various people looking to do investments. About 2 years ago, we opened up an investment firm, myself and my partner Fogel, going into some of the startup businesses that are taking place, people that want to sell online. The short of it is, we move very quick. We try to be very easy, diligent, and if your idea makes sense and we can get comfortable with your idea, we'll fund it. The range that we fund is anywhere between $50,000 to $100,000 on the low end, and we've done deals where we've come in with about $3.5 million on the high end. That's pretty much our comfort range, and you're welcome to talk to us afterwards and see where we go.
Okay, thank you all very much. I want to thank all our panelists. Thank you very much. Any questions from the audience? Question back there.
Yeah, how much or does an investor expect equity share in the company?
Question is, are investors expecting to have equity in the company they invest in?
Yes, how much? How much?
You asked how much equity?
How much is it normal for them to expect to be like real partners just because they're bringing money in?
Should investors expect to be real partners just because they're bringing money in?
I'll take a shot at that. From a real estate standpoint, I've had a lot of people, young entrepreneurs, people in the community that have approached me And they've brought me real estate deals where, if it made sense, I wrote the check and we went in as partners.
I think the answer to your question is that it depends on the type of investment. If you're talking about debt, they're probably not taking equity. But if you're talking about venture, then they are going to take equity. So, I mean, most of the people that you've heard talk about here today have talked about both types of investing, both venture and debt. And venture will generally they'll get paid when that business eventually gets sold or goes public and so on. Did I answer that question correctly for you guys?
Well, just such a big range of what.
The amount is obviously something we can't get into in this discussion, but
And time and involvement.
okay.
It's very subjective, really, depending on what you have, what the potential is, and what your loan amount is, and what stage you are at development. So if you're desperate, the investor's going to get a large. He's going to probably shoot for a large piece of your equity. Yeah.